All right. Welcome to the Ultra High Net Worth Clients Podcast. I'm your host, Chris Broadhead. We started this podcast as a way to create a central resource of the best financial advisor practice growing tips shared by the most outstanding advisors in the industry, of which our guest today is definitely one. These outstanding financial advisors agree to be on the show and provide a ton of value for free, all in the hopes that our audience might learn from their words. My father was a financial advisor, and financial advisors are the main clients we serve. So, my marketing agency's mission is to help every financial advisor grow their business in an effort to help the world become more financially secure. Today, we have the rare pleasure of talking with an incredible financial advisor, Tim Henry. Tim, can you introduce yourself and tell us a little bit about you?
Sure. As Chris said, my name is Tim Henry. I'm a private wealth advisor with Ameriprise, and I'm the CEO of the Henry Group.
Awesome. Awesome. So I like to start at the beginning. How did you get involved in this industry?
Somewhat interesting story, but was an accounting major when I enrolled at St. Francis University. And a friend of mine asked me if I'd like to attend an investment club meeting on campus that was held weekly in the library. And so I agreed to attend the meeting with him. And at that time, the internet was just becoming more prevalent. We did have computer labs. So you had no wireless or Wi-Fi. And but at this time, a lot of the research was still printed. And when you would walk in to the library, you'd grab a Value Line or Standard and Poor's, and we were, doing research or reading fact sheets that were front and back. But by the time the data hit our fingertips, it was 6 months old. But we were making recommendations on whether to buy or sell a stock that the investment club owned. And, fast forward to today, and we just have unlimited information at our fingertips, and it's just evolved drastically since, my sophomore year, which was 1996 at St. Francis. But that really piqued my interest in my desire to learn more about investing. And ultimately, another friend, recommended that I interview with American Express financial advisors at the time, and set me up with an interview, and started studying for my licenses my final semester in college, and was hired and appointed shortly thereafter.
Mhm. Awesome. Awesome. So, American Express, did that turn into Ameriprise?
Yes. In 2005, the company spun off from American Express. And at that time, they changed the name to Ameriprise Financial. But it's been a great company to affiliate with. And I've been there my entire career. 1 year as an employee, in the last 23 years as a self-employed and franchisee.
Nice. How did you decide after a year to become a self-employed franchisee?
Well, that's when things changed internally with Ameriprise, and we at that time, the time that I was hired, everybody was an employee, and then they had platform roll out, so you could basically remain as an employee, you could become a franchise owner, or there was Securities of America. So those were the three options, and at that point in time, I decided that I'd like to be self-employed and my own boss, and was able to meet the metrics to do that. So after about a year, they signed off on it, and never looked back.
Nice, nice. What was it about, being your own boss that appealed to you?
I think just now it's flexibility, but ultimately just control over my own schedule. And I feel that there's lots of resources that exist within Ameriprise, um, you know, in the franchise channel, and so you can, you know, dive in and learn a lot. At least initially, there was a lot of information, a lot of training, and a lot of workshops, and so it just appealed to me to have that flexibility and be able to you know run my own schedule, and that's really what appealed to me.
Mhm. Awesome, awesome. So, how did you get momentum when you were first starting out?
It was tough. It was a grind. I mean, most advisors today don't come into the business the way I did. At that point in time, most firms had a pretty in-depth training program. They'd bring them licensed and train them, and then it involved um, just we had leads through the Ameriprise system, but natural market initially, letting your family and friends know what you do. We didn't have social media that existed at that point, so a lot of it was just natural market in the beginning, and then over time, you start developing um, some relationships, and I think really it's just going above and beyond for those clients, providing good service, great advice, being attentive, um, and really just acting in their best interests. And I think a lot of that early on is disclosure, establishing expectations, and then meeting those expectations. And that's how I've grown over the 24 years that I've been an advisor is through organic growth. I didn't have a family member that was an advisor or had a practice. I didn't acquire a practice. So it's been through organic growth. So one client at a time, and that's ultimately served me well by providing that level of attention and service and advice to my clients. It's benefited me through referrals and word of mouth, and that's really how I've been able to grow. And it just every year gets a little easier as you acquire clients and receive referrals from existing clients, friends, and family.
Mhm. That's awesome, that's awesome. So did you when you were starting out, did you focus I mean, sometimes it's hard when you're starting out, you just kinda cast a super wide net, but a as after you started out and as you got momentum, did you start to focus on a specific type of client? Or tell me how that worked.
Yeah, there's always been a desire to have a niche, practice, but I think it also is very dependent on the town in which you live, as well. And, I live about an hour east of Pittsburgh. I have a second office in a town called Johnstown. So they're not large by any means in terms of population. So you tend to have a very diverse base of clients from all backgrounds. And initially starting out with zero clients and building a practice, you don't have a lot of choice in terms of who you take on. At least I didn't. If you want to survive, you tend to work with anybody that's willing to listen, and or that's been referred to you based on a friend or family member. So, um, I live in those offices are in two smaller towns, so much more diverse. But I think it's also part of the your question, or the answer to your question is onboarding. So, if you establish expectations initially in terms of the way you do business, and ultimately have a clear understanding of what their goals are, and there's a match, then that's really, I think, what's important as you move forward is making sure that you communicate that and do it in that initial meeting as far as expectations and the type of practice that you have and who you work with.
Mhm. Okay, got it. So you started 24 years ago, so you potentially, got to go through 3, like, major market events. Really,
Yeah.
like, pretty wild, time to be an advisor. What did you learn from, 2000, 2008, COVID? What did you learn from those situations that, helped you become a better advisor?
Great question. I think a lot of it comes down to just being proactive in terms of communication. Uh, that is really the most important thing you can do is to reach out to your clients and just explain to them what's happening. And there's things that we cannot control, and the markets are one of them. We can't, we have no control over COVID and the shutdown, and how that played out. And I think if you have, again, set the expectations and the clients are invested appropriately, and you've had discussions around risk tolerance and asset allocation, and they're invested appropriately for those goals, and it makes that conversation a lot easier. And so clients that have been with us for a long time, they don't get excited when the market goes up or the market goes down, and neither do we. We just try to explain what's happening, and also understand that the economy and the markets are two different animals. And so I think that's part of it. Newer clients that haven't been through volatility, typically there is more hand holding and more discussions in terms of what's happening. So I think it just depends on the length of the relationship as well. But every year is different, and that's what I think is appealing to me as well. Is that I don't have the 2 days that are alike. Every day is different. You're always meeting new and interesting people. The economy's changing. The markets are changing. No 2 days are alike, and that's really what for me early on was the struggle. Is there was so much information, and it was just very challenging to stay on top of it all. But now it's really that change that I enjoy and crave, and that variety to my day. But I think it's really just important to establish expectations. But, what happened in 2008 was a very tough time. And I think, it's very stressful for everybody involved when you have a decline in the market of 57% and clients, feel like they're never going to recover, or, it may take 36 months or 40 months to recover, what they gave up. So that's, challenging for sure. But in the end of the day, all of those clients that, stayed the course were rewarded and thanked me later, and appreciated the advice. And I think it's just a matter of staying focused and not becoming emotional, and also explaining, that we've been down this road before, and it will happen again. And, that's a part of it as well. It's just that education.
Hmm. Awesome. Wise words. So, do you predominantly focus on your geographic area?
Yeah, I think we that's where most of our clients,
Mhm.
it's based between our Johnstown and Greensburg office. We do have clients that live in other states. I have some clients that have moved out of the area, 15, 20 years ago, that we're still working with. And we haven't seen those clients face to face. And oftentimes, newer advisors talk about, the virtual meeting virtually. We've been doing it for years. Before Zoom, there was something called Skype, uh, Cisco, WebEx, and now it's Microsoft Teams, but we've been doing that for years. So it's not a new concept. It's something that has been in place, at least with our firm, for many, many years. So that's something that we've been doing, and it's more prevalent, I would say, as far as the number of meetings that we have virtually. But we do have clients in other states that just continue to work with us because of that trust and the relationship we've developed personally and professionally.
Mhm. That's awesome. That's awesome. So you guys were, already well versed in, COVID and post-COVID, client meetings.
Yes. It was an adjustment, being in the office and holding, conference calls and virtual meetings, as opposed to face to face. I think at the same time, it's, people have become more comfortable with it, especially older clients that maybe preferred, meeting face to face in the office, or more apt. to jump on a virtual meeting for half hour, 45 minutes. So there are some efficiencies that come with virtual meetings and even phone
Mhm.
calls. And what I found over time as well is that my clients prefer to meet over the phone or virtually in the summer. People are traveling, people want to be outside, especially here in Pennsylvania. Um, so when the weather's nice, we tend to hold more conference calls and virtual meetings, and then in spring and fall, we tend to hold more face-to-face meetings.
Mhm. Yeah, that makes sense. Everybody's out and about this summer. Um, awesome. And then, as your practice grew, did you notice any kind of commonalities among your clients, or are they all, C-suite executives, business owners? Is there something similar about them that attracts you to them and them to you?
I think in a lot of cases, we think there are definitely overlap, but a lot of it is just I think hardworking people, blue collar, clients that didn't have degrees but were savers. We have a lot of clients that just did not overspend and saved and were frugal and made the most of their circumstances and did not squander it. So we have a lot of hardworking people, a lot of great families who continue to refer their siblings and parents and grandkids, and we have a lot of people with degrees as well. But it's just your you know, they resemble my parents, they resemble my
Mhm.
family, and I think, being able to relate to all walks of life is really important, and I think that's something that we do well. We're relatable, we're professional, we're trustworthy, and, we're not, we don't judge any book by its cover, and some of my best clients were, dairy farmers and, auto mechanics and,
Mhm.
they're not, CEOs of Fortune 500 companies. They're just hardworking people, and they, are, the salt of the earth, and that's, it's rewarding to work with them and sit across the table from them and have discussions and help them achieve their goals and send their kids to college and retire.
Mhm. And, I would, uh, like to mention that hardworking recognizes hardworking.
Yeah.
So they, you saw yourself in them, they saw yourself in you. It was an easy connection, it sounds like.
Yeah. I would agree with that wholeheartedly.
Yeah. That's awesome. So how did you get their attention? How did you get this kinda ICP, ideal client, uh, parameters? How did you get their attention, and how did you convince them to work with you?
I think early on for me, a key component of my growth as an advisor was my community involvement.
Mhm,
When my kids were younger, uh, they weren't involved in activities and we weren't, running every night of the week and every weekend. So early on, I obviously didn't have the practice I have today. So I had more time. And so I spent that extra time building relationships in the community through nonprofits. I served on a lot of nonprofit boards. I was involved in our, Rotary Club and the Salvation Army, the library board. I was involved in many different organizations here in my town. And through that, met a lot of great people and learned a lot as well along the way, serving on those boards and on those committees. But I also think people judge you from afar. And before social media existed and Facebook and websites, it was more face to face. And if you're volunteering your time and you're working alongside somebody on a committee, scholarship committee, or for a 5K, and you develop those relationships on a different level. And I think people see how you conduct yourself in those committees, in those on those boards, and get to know you socially, and that has led to a lot of relationships just through that community involved.
Awesome. Awesome. So just yeah, building relationships, being a pillar in the community. Um, they organically find out the services you offer, and then they're like, "Oh my gosh, I need that." And then they already like you and know you and trust you. Is there anything specific shared in that meeting to kind of convince them?
I think in a lot of ways, I've always been passive from a standpoint of I didn't talk business. I didn't bring up what I did unless somebody asked. So yeah, it was one of those things I never led with. And I just try to develop authentic relationships. And I think, people appreciated that. But it comes back to just understanding what their goals are, where they are today in relation to where they want to be, and also just having expectations. And we've always focused on comprehensive advice. So our firm helped pioneer financial planning. It's something we've been focused on for a long time, and now everybody is focusing on financial planning and advice, and that's just something that we've always been focused on as a firm. So for me, having those conversations were always easy because we always took an inventory of their assets, their liabilities, their income, their expenses. We weren't just talking about, the markets and stocks and mutual funds and ETFs and individual municipal bonds and, what have you. It was always based on where they are in relation to where they want to be. And then, providing solutions that meet those goals and are specific to them. And I think that has really been the key too, is that we're not transactional. We act as a fiduciary. We charge a fee for our advice, but with that fee, they receive value and they get the clarity that they want and ultimately the confidence to move forward and make decisions. And I think really that's what we provide.
Hmm. Awesome. Now, I mean, fiduciaries are much more common today than they were 24 years ago. How important was being a fiduciary, and why was that like a focus of yours when you started?
I think it just made sense to understand the whole picture and not just talks about a portfolio. Because if I don't ask the other questions, I'm not going to have a good I'm not going to do a good job for them. It's a disservice to them if I don't ask all the questions and I don't know everything there is to know about them, because ultimately the advice is not going to be specific and personalized. So the more I know, the better the advice. The more relatable it's going to be, and ultimately it's going to serve them well if we do an inventory and have a clear understanding of where they are from a tax perspective today compared to where they could be in the future in retirement, depending on the sources of income. So that's all, you know, that's all been important as we've built our practice is the focus on advice and comprehensive planning. That's really been, I think, a key and the relationships. Um, the client retention is stronger as well because of it. And those meetings are much more valuable when they realize that we have everything that we need to do our job, and ultimately there's no gaps or holes in the financial plan because we have all the data and all the information, and then we constantly update it and track it.
Mhm. Awesome, awesome. So I'm very curious about kind of I you have another advisor on the team as well.
Mhm. That's right.
Um, how at what point in your career did you bring them aboard, and why was that important?
Yeah, I think there's point in time where um, there's only so many things you can do in a given day. And starting out, I was the receptionist. I was, running the I was handling all the preparation, all
Craft
the
services.
follow up, summary letters. I did it all.
Yeah.
So over time, you make some key hires, and there was definitely been two people that were instrumental in that, and um, my first was an assistant who was with me over 12 years. And she was very good at uh, just talking to clients and making clients feel comfortable. She just was a huge asset to my practice early on, and her ability to take on work and allow me to do my job, or what I enjoy, and make the best use of my time. And she was just very detail oriented, and didn't have to ask her twice. She just we were always on the same wavelength. Just a great work ethic, and so she was very important to the growth of my practice. And then I was able to hire Peter, the other advisor, and he's been instrumental as well in terms of creating capacity, trading, financial planning, and research, and also, talking and meeting with clients as well if needed. So he's been amazing. And then here recently, um, hired my first assistant's replacement, the one I just spoke of, and she has been phenomenal. And she's just continues to impress me every day. She's always one step ahead of me, and it's been a great. We really do have a great team, and we're a small practice, and but we we are very efficient, and I believe our firm and our platform in our firm allows us to do that.
Awesome. Awesome. Um, so I'm always curious, and I would be very curious for your perspective or plan here. To the extent that you're comfortable sharing, do you have a succession plan in mind or thoughts around succession?
Yeah, it's something I think about, not every day, but it is definitely on my mind. I'm only 47 and been an advisor for 24 years, so I have no intentions of leaving the business for several decades. I'll probably be here into my mid 60s or late 60s. I tend to um, have a hard time with downtime. I like being in the office. I wake up every day, excited to come into the office. I really enjoy what I do, and what our team has been able to develop and provide to our clients. So yeah, I don't mind the work at all. I work a lot of hours still at this point, weekends. I'll open the computer for an hour and a half on a Sunday and not think anything of it. But yeah, that's on the radar. I have my oldest son's a business major at his college, and I'm not putting any pressure on him, but I'm not discouraging him either. I think that there's a chance my youngest one has an interest as well, but time will tell. But I at the same time I can't wait for them to decide, and ultimately whether they want to come into the business or this is something they want to do for their careers. So yes, we are constantly looking at our next hire from an advisor standpoint, somebody that can come in and help service and grow as well. And so we have actually some interviews set up this week and next week related to that.
Awesome. Awesome. Well, you've built a tremendous foundation for through which great growth is you're definitely on the path to it. So that's very exciting.
Yeah.
Yeah. Awesome. Awesome. Cool. So we're coming towards the end of the interview. This is awesome. I could ask you questions for the rest of the afternoon. My final question, you may have answered part of it with the succession question, but my final question is an open-ended question that you can take in any direction that you like. And that question is, what are you working towards?
Yeah, I would say right now I'm working towards just I have signed a short term lease for a third office
All
in
right.
in the South, and so I've been traveling there once a quarter for a couple days, and may or may not be something that turns into a third location. Right now, it's an office of convenience. It's not a branch, but there is some desire from me, to spend more time there with my wife. Once my youngest son's in college or out of the house, and so we've always enjoyed uh, Florida and vacationing there. So that's something that I'm working towards, and something that's been um, uh, you know exciting for me at least. To see if I could you know go to practice there, in addition to some clients I already have there.
Mhm. Oh, that's exciting. I'm from Tampa, Florida, originally.
Okay. Very good.
So, yeah.
Yeah, that's a good area. I've been there a few times.
Yeah, yeah, yeah. Awesome. Tim, well, thank you, so much for taking the time. Where can my audience find out more about you?
So, if you can obviously look us up through Ameriprise Financial, there's a find an advisor, and you can look us up in Greensburg or Johnstown. Just type in my name, and my website will appear. We're also on LinkedIn and Facebook, so you can find us there as well. And yeah, that's basically it.
Okay, awesome. We'll be sure to link all of that in the show notes. Tim, thank you so much. This was awesome, man. You've built an amazing practice, and you just did it out of your own hard work and grit, man. That's very, very impressive and a lot to be proud of.
Yeah, I think it's been a combination of just determination and time. And this year, one thing I didn't mention is we were able to obtain circled success within Ameriprise, which was a goal of mine for many years. And so that's something that we were able to obtain this year, which was a big milestone for me in our practice. So
Wow, that's congrats there. That's awesome. Great. Well, to all our listeners out there, thank you so much for tuning in and keep on growing out there, everybody. See